You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 26th day of August, 2024. Thanks so much for joining us. Wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one, that's our live training room. Of course, that's reserved for members only and those who are taking our 1-week free trial. If you haven't taken your 1-week free trial, just go to mytradingiq.com, click the purple button, fill out the registration form, get your desktop set up today, get your indicators indicating today, and then your trial will officially start tomorrow, which is a Tuesday. Now, you're not going to lose a day of the 5-day trial because it's 5 consecutive trading days. So even if it stretches over a weekend, not a problem. You'll still get 5 consecutive trading days, okay? So never worry about what day of the week or weekend or hour of the day you sign up for the trial. Just make sure that when you sign up for the trial that you fill out the registration form properly and honestly. Otherwise, it'll get kicked back. We'll never see it. You won't get a free trial. If you register and you don't hear from us, then you can guess that that's what happened. So give us a call at 949-42-EMINI or send an email to support@cfrn.net. Now, this afternoon broadcast is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com. Just scroll down to where it says Noon Broadcast. Click the link, fill out that 30-second registration form, and you're done. What'll happen going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Benefit there is you'll have access to the question box so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from the desktop, out and about, but you still want to join live. And there'll be days when you're busy and can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is very easy to remember. youtube.com/CFRN. You've already got the YouTube part memorized, right? So all you have to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,600 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. But thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random and have a look-see. And you'll literally see how we've evolved over the years. This is our daily schedule. About 12:50, Michael will join us and give us a recap of what happened this morning in the live training room. And then roughly 1 p.m. Eastern, we'll go live on the TradingView platform and do some live trading for 30 minutes. And of course, we'll wrap everything up with our good word for the day. Now, this morning in the live training room, Michael began the step down of making things a little bit simpler and a little bit slower. Over the years, a lot of traders have struggled with being able to keep up. Michael moves pretty fast, talks pretty fast, and a lot of people just can't move or think that quick. I'm in that category, so there's no shame in that. It just means you're normal, okay? Now, I've always been a fan of larger time frames, but the larger time frames Michael is going to will still be smaller than the larger time frames that I use. So the live training room, although some things will change, you'll still be learning a mechanical model. And it's important to understand that our purpose is to teach you simply to get your goal for the day and then have the discipline to put the mouse away. If your goal is to just trade all day long from bell to bell, yeah, we might not be your cup of tea, okay? Our goal is to make things as simple as possible. And this latest version of the live training room, I think, is really going to help a lot of folks. I sensed some excitement from people this morning as the larger time frames slowed things down and people were really able to keep up. So it's a very good thing, and I'm sure Michael will share some of that with you this afternoon here in the next, 40 minutes, 50 minutes or so when he joins us, okay? We'll start where we always start each day with our daily devotional and a word of prayer. This is the last day on the topic that we've been on for the past week. Devotions for living in faithless times. Today's scripture is Proverbs 31, verses 1 through 3. And I'm going to share with you from the Message translation. Starting in verse 1. The words of King Lemuel, the strong advice his mother gave him. Verse 2. O son of mine, what can you be thinking of? Child whom I bore, the son I dedicated to God. Don't dilute your strength on fortune-hunting women, promiscuous women who shipwreck leaders. Strong words. Proverbs 31, verses 1 through 3. So today we'll talk about being the man or woman who speaks up. As Mr. Smith stood to speak about greed and corruption, some thought he was foolishly throwing away his political career. Others worked overtime to push him over the edge. A few, however, stood in his corner, knowing his efforts might prove futile, yet strongly hoping his words would be heard. Perhaps Mr. Smith could do what no one had yet been able to do. If this story sounds familiar, that's because it's the plot of the classic movie, Mr. Smith Goes to Washington, starring Jimmy Stewart as the title character. You too have a certain amount of influence, large or small, wherever you go. It takes guts to speak up for others, especially when you feel no one else is listening. It's always easier, after all, to just stay silent. However, for those misunderstood, mistreated, poverty-stricken souls, your voice may be the only hope in sight. These opportunities aren't just limited to social programs. Everyone, including you, has an opportunity to change a life. When you speak for those who lack a voice, new friendships start to form, leading to new opportunities to share God's life-changing message of salvation. That opportunity can change eternity for someone in need. Maybe that's why you're here. People need to know that God has sent help. Couple questions. Do you feel uncomfortable speaking up for those who have no voice? If so, how can you change your outlook by identifying with those in need? Join me in a word of prayer. Heavenly Father, we come before you today seeking for wisdom and guidance. Just as Proverbs 31 warns, help us guard our strength and focus on what truly honors you. Keep us from distractions and lead us away from anything that would diminish our purpose or cloud our judgment. Father, grant us discernment and help us to walk in your ways with integrity and humility. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen and happy Monday. Let's go over the numbers from around the world. Take a real big picture look. Then we'll get into some market headlines. Oh, got breaking news. Apple's announcing an iPhone event for September the 9th. This is when that new AI model is going to roll out, I assume, or they'll tell us when it's going to roll out. All right, starting here in the U.S. with the cash markets, or the indices, as they're called, we have the dreaded divided markets. Currently, the Dow is up 8 points. The NASDAQ, on the other hand, is down 178. That's 1%. S&P 500 is down 23. The Russell 2000 is up almost 3 points. Now, as futures traders, we like to see the 4 major indices all the same color. Doesn't matter if they're all red or all green, we just like to see them the same color, because when they are, that means they're all traveling in the same direction. And whatever futures market you're trading, whether it's the S&P, the Dow, the Russell, the NQ, chances are you're going to have better follow through on those days. But on the days when the markets are divided, like they are today, got 2 in the green, but just barely, and 2 pretty deeply in the red. My guess is that by the end of this broadcast, we're going to see all four in the red. But let's not get ahead of ourselves. We'll see what that looks like at the end of the broadcast. The Asian markets at the close. The Nikkei dropped 254 points. Shanghai rose just over 1 point. The Hang Seng gained 186, which is a little over 1%. Then the European markets at the close, FTSE up 39, the DAX down 16, the CAC up 13. So we had a mixed day in Asia. It was a mixed day for the UK. And it's a mixed Radio Monday at the moment here in the US of A. Let's take a look at a few headlines. Now, don't let this one freak you out. Wait, is that? No, I'll get to that one. I'll get to the one that might freak you out in a minute. 2 astronauts stranded at the International Space Station will return aboard a SpaceX vehicle in February next year. The pair, Suni Williams and Butch Wilmore, arrived aboard a Boeing Starliner in June for an 8-day mission, but experienced a helium leak and malfunctioning thrusters, endangering their return trip. The Starliner capsule will attempt an uncrewed return in September via autopilot. The International Space Station is roughly the size of a 5-bedroom house and can accommodate 6 crew plus visitors. 9 are currently aboard the facility. Both SpaceX and Boeing were awarded funding under a 2014 NASA award aimed at developing private transportation to the International Space Station. SpaceX has flown 9 crewed NASA flights to the ISS since 2020, while Boeing has yet to complete a successful mission, despite reportedly going $1.5 billion over budget. Man, Boeing just can't seem to catch a break. A lot of it has to do with its hiring policies, but in an attempt to remain apolitical during this broadcast, I won't go into the reasons, but let's go to Israel. Israel and Lebanese-based Hezbollah exchanged fire early yesterday in an escalated set of strikes following Israel's assassination of Hezbollah's senior commander, Fuad Shakur, last month. Hezbollah says it launched 320 rockets, hitting 11 Israeli military targets in what it called the first phase of its retaliation for the death of Shakur. Shortly before the rockets began firing, Israel said 100 of its fighter jets carried out preemptive strikes to prevent a larger scale attack, saying it destroyed thousands of rocket barrels at over 40 sites. Lebanon reported 3 fatalities. So far, none reported in Israel. The strike comes as the Biden administration continues to pursue a ceasefire deal between Israel and Hamas amid tensions with Iran, which funds both Hamas and Hezbollah. Iran has promised to retaliate against Israel over the death of the Hamas leader, but suggested it could hold off in the event of a ceasefire deal. Now, without being political, it seems like every dirty road leads back to Iran. So why not get to the root cause of the problem. It's just like when you go to the doctor. You could put a Band-Aid on something, and hope it gets better. But if you've got, say, a splinter in your finger, it's going to continue to get infected and swell and potentially kill you. Obviously, doctors know the smart thing to do is to just go in there and get that splinter out so that the finger can heal up. All right, here's the news that might concern you if you're a member, but I don't think you have to worry. Telegram founder and CEO Pavel Durov was arrested Saturday at France's Bourget Airport in Paris. The 39-year-old Russian-born billionaire was reportedly detained over the company's lack of content moderation. Telegram is among the world's most popular social media apps after Meta apps, Facebook, Instagram, and WhatsApp, as well as YouTube, TikTok, and WeChat. The app's nearly 1 billion users can send encrypted messages in groups of up to 200,000 people. The app is popular among journalists, activists, and dissidents, but has also been used by extremist groups and people involved in drug trafficking and the distribution of child sexual abuse images. Telegram markets itself as a haven for free speech and boasts fewer than 100 employees, significantly below the thousands of people employed at Meta, YouTube, and TikTok. The arrest comes as the European Union has begun cracking down with its Digital Services Act, imposing stricter rules on content moderation. Now, while we are very much proponents of free speech, when it comes to drug trafficking, human trafficking, child pornography, we're very much against those things. So the question is, of course, how can we keep the good part of Telegram and get rid of the thugs? Hopefully they can figure that out, because we sure rely heavily on Telegram. Jumping over to Wall Street, when JP Morgan Chase told investors this month about a possible Consumer Financial Protection Bureau enforcement action targeting bank-owned payments app Zelle, it also offered a warning to those same regulators. The New York banking giant said it was evaluating whether to sue the CFPB over the Zelle inquiries, according to a quarterly filing made on August 5th. Regulators and some lawmakers are concerned about fraud on the platform, which is owned by 7 lenders, including JP Morgan. NVIDIA. Federal Reserve Chairman Jerome Powell told investors on Friday that the time has come for policy to adjust. In response, stocks finished the week near record highs. S&P 500, the NASDAQ, and the Dow Jones Industrial Average all rose more than 1% last week. The S&P 500 is now roughly within 1% of a record closing high. But it's got an obstacle to overcome, and you'll see that when we go to the charts. But the market's rebound from August lows will be put to the test with a highly anticipated earnings release from AI leader NVIDIA after the bell Wednesday. Earnings from Salesforce, Best Buy, Dell, and Lululemon will also be in focus, while a key reading of the Fed's preferred inflation gauge will highlight the economic calendar. On Friday, Powell made clear to investors that interest rate cuts are coming in September. But he did not explicitly signal how aggressively the central bank will slash rates as it gets this easing cycle underway. Powell noted the timing and pace of cuts will depend on incoming data, and markets quickly moved to fully price in 4 rate cuts of 0.25% by the end of 2024 on Friday morning, after the Fed chair said the central bank has ample room to maneuver as policy enters its next phase. They got a whole lot of room to maneuver. Now, I know we have a lot of members up in Canada. Canada's government announced today that it's imposing a 100% tariff on imports of Chinese-made electric vehicles that matches U.S. tariffs and follows similar plans announced by the European Commission. The announcement came after encouragement by U.S. National Security Advisor Jake Sullivan during a meeting with Canadian Prime Minister Justin Trudeau and cabinet ministers on Sunday. Sullivan is heading to Beijing tomorrow. AI takes a whole lot of electricity. You know, everybody complained for so long about how much electricity it needed, how much electricity was needed to mine Bitcoin. But now, AI is fighting for that same electricity. Amazon is ubiquitous in today's world, not just for being one of the biggest and most established online marketplaces, but also for being among the largest data center providers. In fact, you may not know, Amazon does not make the bulk of its revenue or income, net income, from sending packages to your doorstep 5 times a day. It's their cloud storage and cloud computing services, where they have all kinds of contracts with the government, the CIA, the FBI, all the big names. And not just here in the US, but around the world. That's where they make most of their money. Now, what Amazon is even far less known for is being the owner and operator of nuclear power plants. Probably didn't know that. You probably thought that only governments could have a nuclear power plant. Not anymore. In March, AWS, which is Amazon's cloud subsidiary, purchased a $650 million nuclear-powered data center campus next to a nuclear power plant from Talen Energy in Pennsylvania. On the surface, the deal indicates Amazon's ambitious expansion plans. But dig deeper, and the company's purchase of a data center campus adjacent to a nuclear power facility speaks to a broader issue that Amazon and other tech giants are grappling with: the insatiable demand for energy from artificial intelligence. You may have noticed that crude is up today. If you're wondering why, in fact, oil prices rose nearly 3%. Oh, you know what? We never visited the commodity basket today. I jumped straight to all of the indices. Let's see what we got in the commodity basket right now. Bring in some fresh data. All right, crude oil was up 3%. Now it's up a little over 2%. No, I'm sorry. It's almost 3%. It's up $2.12, trading $76.95 last. Gold is up $4, trading $25.50 last. Silver is basically unchanged on the session. Okay, well, fair enough. So the reason behind crude's sharp rise: escalating conflict in the Middle East, as well as production cuts in Libya. Both benchmarks gained more than 2% on Friday. Now, according to BOK Financial, the near-term buying seems justified. A long-expected missile attack by the Iranian-backed Hezbollah movement appeared to have been largely thwarted by preemptive Israeli strikes in southern Lebanon. However, there was no agreement on Sunday in Gaza ceasefire talks that took place in Cairo, with neither Hamas nor Israel agreeing to several compromises presented by mediators, according to two Egyptian security sources, casting doubt on the chances of success in the latest U.S.-backed effort to end the 10-month-old. And as a result, oil prices jumped. Tried to get a mortgage lately. Mortgages are locked in at low costs, provided U.S. consumers with an extra $600 billion in spending cash since 2022, blunting the impact of the Federal Reserve's interest rate hikes, according to analysis by the Swiss Re Institute. The boost received by homeowners with fixed-rate mortgages amounted to almost 2% of all personal consumption spending, according to economists. The effect has been to mute the impact of monetary policy transmission as consumer demand proved resilient to Fed hikes. Yeah, but they don't tell you that all those savings are about gone and those credit cards are about maxed out. The same mechanism will likely counteract the effectiveness of rate cuts that the Fed is now planning, and will make it harder to stimulate consumer demand if the economy slows. That limited boost from looser monetary policy could lead to a sharper easing cycle over the next year than our baseline currently assumes. During the recent Fed tightening cycle, market rates for U.S. mortgages exceeded the average rate that borrowers paid on existing mortgages by as much as 3.2 percentage points. Because the impact of monetary policy moves was dispersed, with a large chunk of household debt shielded from any impact, the Fed may have raised rates higher than it would have otherwise, in effect penalizing renters. These suggested price controls that are being talked about, that's guaranteed to lead to a scarcity in affordable places to rent or buy, and empty shelves at the grocery store, and long lines at the gas pump, like we saw back in the 70s. Coming year may see the same effect in reverse, pushing the Fed to cut rates more aggressively. The median home price has risen some 60% since early 2020, and credit card delinquencies are above pre-pandemic levels, pointing to larger household debt burdens that will only see limited relief from lower borrowing costs. And last but not least, stock traders gearing up for the Fed's rate cuts sent tech megacaps sinking, with Wall Street awaiting Nvidia's results on Wednesday. Most shares in the S&P 500 gain, with Wall Street resuming a pattern of money rotating out of the safety of big tech. That's after Jerome Powell signaled Friday the Fed will slash borrowing cost in September. Just don't know by how much. While the U.S. equity benchmark didn't do much on Monday, its equal-weighted version, one that gives Target Corp as much clout as Microsoft, hit an all-time high amid hopes the advance will broaden out. And that's the news. Fit to read. Okay, last week, this is how we finished out. Last week was week 316 of Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude and gold and silver and euro and bonds. So, at the bell Friday afternoon, we issued a total of 57 Logic 247 alerts last week. 10 never triggered. That gave us 47 actionable alerts, of which 10 or 21% would have been stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week, so far, now this recap was done this morning at 6:30 a.m. Eastern. The markets opened last night. The Monday session began last night, Sunday night here in the U.S. at 6 p.m. Eastern, just as the Tuesday session will begin tonight at 6 p.m. Eastern. The Monday session will end at 5 p.m. Eastern. So since the markets opened last night through 6:30 a.m. this morning, when this recap was done, we issued 14 alerts, still waiting on the outcome of 8. That gave us 6 actionable alerts, of which 2, or 33%, would have been stopped out, again based on market structure and that simple process we teach all of our passport holders. Now, over the last 317 weeks, we have issued 17,686 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, again, based on market structure and that very simple process we teach all of our passport holders. Now, the logic alerts come with an entry price, an initial target, additional targets if warranted, and then a final trade to target. The purpose of the logic alerts is not for you to simply trade so you don't have to learn how to trade. I know some people make that mistake, and it is a mistake. The purpose of the logic alerts is to teach you how to read a chart, how to spot windows of opportunity, obstacles, be they resistance or support. You're looking for that window of opportunity. And so, when the Logic 247 alerts come out around the clock, 24/7, be 2 a.m. or 2 p.m., futures trade around the clock, we have traders around the globe. If you will take the logic alerts of the markets you actually trade, or you can speed up the process by just doing it with every logic alert, draw a line in the, go to the 30-minute chart and draw a line in the sand at the entry price, or another horizontal line at the initial target. That's enough there to get your goal for the day. Then draw horizontal lines at all the additional targets. And then stare at the masterpiece you've just created. You've just mapped out where price should go, where it should potentially run into trouble, resistance on a long trade, support on a short trade. Once you learn to read a chart, you can map out your work in advance. And then as price enters these windows of opportunity that you've defined, you can then drop down to your smaller time frame to actually execute your trade and minimize the risk necessary to put the trade on. Long before we had the logic 247 alerts, and as I said, we're in week 317, that's a lot of weeks. We also have our concierge trade alerts. Now this will help you find out if you've learned to read the chart properly. Okay? The CTAs don't come out around the clock like the logic alerts. The CTAs are published as a static report shortly after the Globex open each evening. As I said, the markets opened last night at 6 o'clock, so at 6:15, all of our members and trial members had every one of these targets. The first thing you do when the report comes out is go to the 30-minute chart of whatever market you actually trade. Make a note where price is at the time the report's published. It'll always be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. The BBC is simply the green line that you see on all of my charts. Markets are fractal in nature, so you can apply the BBC to any time frame, daily, weekly, monthly. For the purpose of alerts, it's always the 30-minute. Nothing magic about 30 minutes. It's just the time frame I've used for the alerts for many years. If it's not broke, don't fix it. So whether you put it on a daily, weekly, monthly, 30-minute, 5-minute tick chart or range chart, the function is the same. As price gets above the green line, you should anticipate higher prices relative to the time frame you've applied it to. If price gets below the green line, then you should expect lower prices relative to the time frame you've applied it to. Now this is where you start to look left on your own to spot those potential obstacles. When you're looking in the Logic 247 channel, you'll see PR, PR, PR. That's potential resistance. Potential resistance. You can think of it as target number 2, target number 3, target number 4. Or if it's a short, then it's PS, potential support. You've got T as your initial target, and then target number 2 or PS, 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 target 3, target 4. The final trade to target will always be the weekly trading zone above on a long, and the final trade to target will always be the weekly zone below on a short. By this point, you should be understanding how price behaves at a weekly trading zone. It's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to get to the zone above. Price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zone since December 14th of 2009. So this December will make 15 years. They come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Beyond that, just resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, we use the top-down approach. So we're going to look at the daily chart for a moment. Michael should be joining us here in about 5 minutes. This is the daily chart of the S&P. Now you might say, I don't trade the S&P, or I don't trade the daily chart. I trade the S&P, I don't trade the daily chart, but I go there to gather very important information. If you were tuned in last week, I kept talking about resistance being at the 50% fib extension. And it was 1, 2, 3, 4 consecutive sessions. The step line, the black line, has now fully crossed blue and climbing. So price is trapped. You've got resistance at the 50% fib extension and the high of the day. Now today's high is 56.69. If we go back to Thursday, 65.25 was the high. There's Thursday, Friday, there's Monday. So compared to the previous 2 days, Thursday and Friday, we've got a pretty small range day. You'll notice that price has found resistance at blue and climbing because it's gotten directly above price. And support at the step line. Once the step line gets directly below price, it becomes potential support. Now you can see that on the way up, you had the perfect stack. Price, step line, blue and climbing. Surprise came here when price traded through the BBC. But as it traded through, what did it do? It pulled back to the BBC, and the pullback held. The race was on. And we took out all kinds of important resistance levels. What we haven't done is close above the 50% fib extension. Could today be the day we do that? Well, we'll have to wait to the close to see. So the purpose of looking at a daily chart of whatever you trade, whether it's futures or stocks or crypto or Forex or ETFs, is to get an idea what the deep pockets are doing. Institutional traders look at daily, weekly, and monthly charts, where you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has to do with account size and the size they trade in. The institutional traders are the ones who literally move price. So, by just spending a couple minutes at the beginning of your daily session looking at the daily chart, you can get an idea what the deep pockets have been doing overnight or at whatever time period you open up your charts. If your gig is to start trading at the 9:30 opening bell, you can clearly see in one candle for whatever it is that you trade. It doesn't have to be the S&P. It could be the Russell, it could be the NQ, individual stocks, any market, okay? Now, with stocks, of course, you're going to have gaps on a daily basis because remember, stocks stop trading at 4 p.m. Eastern, Monday through Friday, but not futures. Futures trade around the clock with a 1-hour break each day. So looking at the daily chart is sort of a fact-finding mission. Okay, so we know right now, by looking at the daily chart, where major resistance is. Below us, we've got support at the daily step line. Obviously, that was important support because look how far we bounced. If we trade below the step line, then we've got the 38% fib extension, then the 24% fib extension, and then the 24% fib retracement. Just below the 24% fib retracement is the daily BBC. Now, again, BBC stands for bull bear cross. When price crosses below the green line, we're bearish, relative to whatever time frame you put it on. When price crosses above the green line, we're bullish. We expect higher prices. Below the BBC, lower prices. Above, higher prices. That's all really simple. Now, it's important to note that the pullback holds more often than it doesn't. Okay? This pullback held for days, but it had red and falling overhead, which is bearish, and that eventually pushed it below the BBC down to this low put in April 19th. And these fib retracements are drawn from that April 19th low to the July 16th high at 57.21 and a quarter. So we've got a leg, a retracement, and a leg. Or do we have a leg, a very deep retracement, and the beginning of another down leg? Well, keep in mind, the pullback to the BBC holds more often than not. And once it trades through it, look what happens. Price pulls back to it, and it holds. So we get a leg, we get a retracement, pullback holds. Here, on May 3rd, price traded through the BBC and closed above it. And then we spiked the BBC on July 18th, but we closed below it on July 19th, right at the 24% fib retracement. Pullback held, we got a leg, retracement, a leg, and then on this pullback, August 13th, we traded through it. Now, we had a lot of econ reports that supported the Fed lowering interest rates, and of course, the rest is history. Okay, all alerts are created on a 30-minute chart, so we'll pick up right here with the 30-minute chart of the ES when I come back. Right now, Michael's going to give us a recap of what happened in the live training room. And then we'll go live on the TradingView platform for 30 minutes, do some live trading. And then when I come back, we'll finish the recap. And I'll wrap things up with our good word for the day. All right, Michael, looks good.
Excellent. Here we go. All right. Good afternoon, everyone. Today is Monday, the 26th day of August, 2024. Woo-hoo. All right. Now, if you have not taken a free trial with us and you want to, go here at mytradingiq.com. Click on the purple button right here. All right. Click on that purple button. There is no credit card required for the trial. Just click on that, and it will bring you to this registration page right here. On this page, all that we ask for is your name, your email, your phone number, and 5 multiple choice questions down here. If you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. Okay. Hit the register button. Once you do that, you'll be sent everything you need to get into the room in the morning, and your indicators will be indicating, all right? Everything will be indicating on your charts. So that is all you need to do. Now, the spreadsheet. Today, we are in our last week of the 24/20 blueprint. So we have 4 days left of green here that we need to get for the rest of the week. It'll be done with our 24/20 blueprint. We'll have reached 20 consecutive months of green. Well, overall green. Anyway, if you can read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today is the 26th day of August, 2024. We made 20 ticks on the NQ. Is that right? Yeah. 20 ticks on the NQ, 60 ticks on the YM, and we lost 7 on the ES. We didn't make any. We didn't make any on the Russell. That put us at plus 312.5 on the morning session. Today it took 20 minutes and 4 trades to get to $2,000. That is with 20 contracts on. All right, we took a total of 12 trades. So on the month now we're at $9,280 over 18 business days, averaging $515 per contract per 2-hour business day. On the year we're at $67,232, averaging $422 per contract per 2-hour business day. Now, if you were to quit trading when you get your goal for the day and add 1 contract per month, so far this year, you would have only had to work 50.18 hours, and you would have averaged $1,913 per hour. Okay, $1,913 per hour. If you started the 24/20 blueprint with me at the beginning of last year, you'd be in your 20th month right now, and you'd be averaging $7,293 per hour. $7,293 per hour. Amazing, isn't it? And look, there's definitely something to be said for starting at 927. Yes, the magical number, 927, not 926, not 928, 927. Actually, the whole magic of it is just that if there's anything that sets up in that 3-minute span between 927 and 930, usually at the open, right at the open, the markets pop and it hits the target for the day, or the goal for the day. So the key is to have a target set at the goal for the day. See all these ones that are exactly 2,000? Exactly 2,000. That is because I had a goal set right at the, or a target set right at the goal for the day. The ones that are 4,800, that means it went and hit the, every trade has a bracket on it. It has a maximum number on the bracket. And those ones that are much larger, they hit the maximum bracket. That's usually in the first trade. The first trade or two. The first trade is when it nails it. And that's good stuff. Good stuff when it happens. So let's get in there. So we switch things up a little bit today. And we have the larger time frame, which we started a couple weeks ago. But now we switch things up in the actual indicators. We have an indicator reduction going on. All we have here is the ribbon. You see the weekly trading zones, the ribbon. And down here we have the TV trades range trigger. Right now, I've had that on there for the last 3 weeks. You guys have been able to see it and watch it, and we've been talking about it little by little. Trying to get used to seeing it anyway. And now we'll get used to you using it. So the trade setups, when we were back here in this layout, things evolve over time. And in my effort to make things as easy as possible for everyone, I think I complicated things. Now, it made it easier for some people, but not necessarily for new people. Right? New people see all this stuff and it's a whole bunch of things, but people that have been here for a while have seen it grow gradually, and so they see when I add something new, like a different color arrow or something like that. They understand what that means. But somebody new, this is a whole bunch of stuff to learn, and eventually it becomes overwhelming for everyone, even the people that have been watching it slowly and asked for it. It eventually becomes overwhelming for everyone, and for me to try to teach, to try to trade, to try to show you guys, to do it in front of you, with you all, it becomes complicated. So we are stepping back to a much simpler way, a larger time frame way, where there's fewer, more meaningful trades that are easier to see and get into and see coming ahead of time, like this one right here, for instance, on the ES. All you want to see is the lines in the ribbon and it to come out of oversold or overbought in the direction of the ribbon. Okay, it doesn't have to hit the ribbon on the pullback. It's got to be coming off a higher swing. It's all the other things that you normally know about price action trading. It's got to be coming off a higher swing, and it's got to come out of the oversold now. You just have to have the ribbons. It doesn't have to bounce off anything. It doesn't have to do anything special like that. All right, it's just got to come out of the oversold or out of the overbought in the direction of the ribbon. For you, Bart, we'll give you a deal. But you have to give me, Bart, you have to give me your TradingView login ID. Okay. Because I want to simplify it for you. for everyone really, but for you especially, because I know you like to keep it simple, but you have a way of complicating things too. We all do. Anyway, so all you're looking for is for the ribbon to be spread out like this and for price to come out of the oversold in this case. And if we're in a downtrend, the ribbon's going to be spread out the other way, and we're looking for it to come out of the overbought. It's as simple as that. If you're not getting any trades, you can switch to a smaller time frame if you want to. It's going to be the same thing. A 19 range down to a 7 range. It's going to be the same thing. You want the ribbon to be spread, and you want to come out of the oversold. Bing, there's one. We're almost in the oversold right here. It doesn't matter if it hits the ribbon. It doesn't have to hit the ribbon. It's just got to get in the oversold and come out of it. Okay. The ribbon's got to be spread. That's step number 1. The ribbon's got to be spread. So stretch it out like that so you can see it a little better. The ribbon's got to be spread, and it's got to come out of the oversold. Right? If the ribbon's not spread, then don't take the trade. Okay. Ribbon's got to be spread, and it's got to come out of the oversold. That's all there is to it. So let's get into the trades that we did take. Okay, this morning. On the YM, here they are. Our first trade here on the YM, we picked up 5 ticks. And then here we picked up another 10. That's where we got the goal for the day, I think. We had 15 ticks right there. Then the next one here, we picked up 20. That got us to 35. Then we picked up 5 more. That got us to 40. And then toward the end of the session, we picked up 20 right there. That got us to 60. That was the YM. So look at every one of these trades. Right? The ribbon spread, we came out of the oversold. The ribbon spread, we came out of the oversold. The ribbon spread, we came out of the oversold. The ribbon spread, we came out of the oversold. The ribbon spread, we came out of the overbought on this one. Okay. And then here we're moving over here. Now the ribbon is spread. We want it to pull back down and give us a trade here. Okay. That's it. Right, on the Russell now. On the Russell. Gotta crunch it up. And yeah, just the one trade here on the Russell. That one there. And we got to break even on that. I don't know why it's a blue arrow. It should be a break even arrow. We got to break even on that one. There were many more trades though, where the ribbon was spread. Here's one right here that I didn't do. I guess there weren't many more trades. It was one more trade. You just want to see where it's coming out of the oversold, where the ribbon is spread. Okay, so the ribbon wasn't spread all that much this morning on the Russell. This one right here that we missed, could have done right there. And it was coming unspread there, but that was it on the Russell today. All right, so we had the one trade there that we could do. And on the ES, so the trades that we had on the ES today, we had this one right here, and we picked up, actually we had 2 trades. We had that one that we got 2 ticks on. We had the one right in the pre-market. I think that might have been the one we got 2 ticks on, and somewhere along the way we got one more tick somewhere. It had to be where it came on right here. I think we got one more tick here. And then we stopped out on that one. Okay, it had to be where it came out of the overbought or oversold. So right there was really the only other candidate. We got one more tick to get us to 3, and then we stopped out on that. And that put us to -7. Yes. Now, I believe there were some more trades in here. Some trades I wasn't really paying attention to. There was one trade that I put on that I wasn't paying attention to during the session this morning, and it stopped out. I don't know where it was, but I put it on. It did stop out somewhere. Anyway, we did stop out on this one for sure. All right, and that did end up going in favor of the trade. It just did it after it stopped us out. Now you can see in here, the ribbon wasn't spread too often in here. Right here where it did finally get spread, there was a trade right here that you could have taken. Okay, and then the ribbon's all crunched up right here. It finally spread out a little bit. There's a trade right here you could have taken. In here, it was spread out a little bit. You could have taken a short right in here. Another one right there. then it spread out again over here. We've taken a long right there, and a long right there, and one last long right here. Okay. That was the ES. Now the ES is still on a 7 range. We ended the ES with -7 ticks is what we ended with. Now the NQ, I traded the NQ just a few times this morning. And I think a couple of the times that I traded, I did it from the old stuff. We're actually picked up some stuff in here. This one in here, I think I went with the cross down here, and I ended up with a break even there. And I did it again right there, and I ended up with a break even. And then it doesn't look like I put in the 2 trades that I did take, but it was during the lesson plan when I went back to the old school stuff. Maybe that's why it's not in here. If I hit save on this right now and I go back here to the old school stuff, now the old school stuff is the stuff we've been working on for so long. I think in here you'll see that there are 2 trades that I took in here this morning. I don't know if I put the blue arrow on it, but I know I was in here, and I was going through the difference really between what we've been doing and what we're changing to with the speed of the trades and like the audible stuff that I'm doing. There it is right in here. So here we had one of the trades right here and one of the trades right here. So on one of them we picked up 4 ticks, and on the other one we picked up 20 ticks. Those were the trades from this morning. And this is on a 15 range. It's showing it right here, but I'm not sure if it was on a 15 range or a 31 range this morning. I think it was on a 31 range. I actually did it. I don't think it was on a 31 range. But anyway, this is why we got those other 2 trades this morning. We got 1 + 4 and 1 + 16 is what we got on plus 20. 1 + 16 got us to 20 total this morning. And I wanted to jump back to this morning for a little bit. So people that have been watching it, watching us for years, doing this stuff for years, I mean, it works. It works. And what I'm going to tell you is, if what you got going on right now is working for you, then don't change anything. Don't change a thing. All right. But if you're not making money, if you're not consistently making money, then I'm presenting you with an easier thing that is easier for everybody to do. What did I say about you? I said you need to send me your TradingView login ID. Start there, Bart. Okay. And I said you, like me, have a way of complicating things. By having, 4 monitors and stuff spread out over monitors and all that stuff. Okay, so that's it. So if you're just coming on right now and you're watching in a live stream, what we're looking for is revenue spread and commodity oversold. Revenue spread, commodity oversold. These 2 right here are prime candidates for trades right now. We need up closes on both of these. Now we need 20 ticks above the bottom. So that one's going to be at 380. Now look, see, on a slower time frame like this, you can see me put the trade on, see the whole thing happen. Like the Russell right there just happened. Here's the Russell, and we're still waiting for the YM to happen. Here's the Russell. Now this is, I'm sorry, this is not anywhere near where it needs to be. This stop, it's at 30. It needs to be down at 15. 30. 8.3. Okay, so we just triggered in on the YM too. I think that stop is where it's supposed to be. This one should be 25 ticks away. So that is going to be 6.3 would be 20. And right there, 0.8. 5.8 is 25. Okay, so it goes to break even after 10 ticks in profit. And you see why we did this, right? The ribbon is spread, the ribbon is spread. We got an up close that pulled us out of the oversold on both of these. So that's the trade setup. That's the whole thing right there. If we do this with just 2 things right now, 2 things side by side. Here's the YM. I'll go find a Russell. Here's the Russell. Okay. Ribbon is spread. We came out of the oversold. The ribbon is spread. We came out to be oversold. That's all the requirement for the trade. That's all you need. Okay. So 10 ticks in profit. When it gets up to right there, I'll bump the stop to break even. And this one's going to get up to right there. I'll bump the stop to break even. Okay. Almost there. The Russell's taking its time, but the YM's starting to move anyway. And almost there on a YM. Just a little bit more. One more. Of course, the break-even button is not going to work without the dialog box, right? So the Russell's just about up there now too. There it goes, break-even. This one over here, it's got to get up to 0.3. Now this, as it gets up to the swing higher at 406, as it gets up to 406, that is time for it to start, probably hit some resistance and come back. So if it gets up there, I'm going to start locking in some profit, probably 10 ticks, maybe more. Okay, we just got to break even on that one. And on the Russell, we didn't make it enough. Nope, we came one tick away from, actually it looks like no, we had to hit 0.3. Right, so the Russell's still working. The YM gave us just about 20 ticks, right? 10, 79 up to 99. Yeah, just about 20 ticks. The YM gave us. Now the Russell's still working, so we got to let the Russell work itself out. We ended up with the break even over here on the YM, but we did have 20 ticks in profit at one point. And so now let's bump this, not like that. I want to go out to 4 again because I thought the NQ was setting up too. Yeah, I think the NQ did set up while we were doing that setup right here. Okay, but I didn't get that one. Now I got to get my Russells on back up again. Hang on. Hang on. There it is. Okay, the ES is starting to spread out here too. It's almost set to go. Now the NQ is almost set to go again too. You see we're in the overbought. You don't have to hit the ribbon on the pullback. It doesn't hurt if you do, but you don't have to. Okay. And so now we're just waiting. Isn't that an easier trade setup? Now the Russell's trying to work itself out again here. Let's try it. Yes, it's just about to go to short. I just gave this over here. I got that on my phone too. Oh, I didn't even notice this over here on the NQ. Sorry, I didn't notice it on the NQ. That is a short right there. Well, I'm shorting it right now on the NQ. Maybe the short should have been from back here. All right, so the Russell's struggling to move up, and the NQ does not look like it wants to move down at all. Now my stop on the NQ is 36 ticks. And my target is 48. My stop is 36. And Russell's getting there. The YM is just about up at the swing high now. It's got to go through the swing high. So we're waiting. It's got to get 10 ticks in profit to bump the stop to break even. It hasn't gotten 10 yet. It's only gotten 7 so far from my entry point. My entry's pretty good. I only got 1 tick of slip, 2 ticks of slip, I guess. Not too bad. looks like this is going to stop out. We'll see. Maybe not. So I know this doesn't make for real entertaining stuff because so few trades and all that, but it's not really about entertainment. It's too bad we missed that one. Remember, you guys are only trying to get the goal for the day. Okay, you're only trying to get the goal for the day. We had the goal for the day on that 1YM trade right there. We had 20 ticks in profit on that. And I've already gotten the goal for the day several times over. So I am doing this just for your educational purposes. And if we get up above here on the NQ, we're going to stop out for sure. But if this bar ends up closing it down, yeah, we did stop out. I was going to say, if that bar ends up closing it down, then we'll have a really good trade on our hands. Now, a stop out on this should help out the Russell trade over here. So kind of balance off pretty much. Stop me out to the tick right now, and it's going to go down. That's frustrating. Well, so far we've had the one trade here, didn't put in a higher swing, did go 20 ticks into profit. We've had the one trade here, went 9 ticks into profit, did not get enough to get the stop to break even. We've had the NQ trade that stopped us out to the tick and is now going down, where I would definitely move my stop to break even at this point. Oh, that's frustrating. And we have the Russell trade that's still going on here. Okay. Stopped us out to the tick and then ran down. That happens. If I'd have gotten this one right here, we'd have picked up 45 ticks on that. I'd say, you know, it is. So we did not put in a higher swing from our last trade over here on the YM. All right, that makes this one a little less appealing to me. Ribbon's starting to crunch up there. Russell was still struggling. Okay, I am looking over here. This. All right, Russell looks like it could bounce off the ribbon right here, but it doesn't look like it's good. The stop is 25 ticks away on that. Okay, 25 ticks away. And it just got me. So we had to stop out. And this one over here stopped us out to the tick and then went down. If we'd been paying attention, we'd have gotten 45 ticks there. And if it didn't stop us out to the tick, we'd have gotten it there too. The yes right now is pulling back. You see it's going into the weekly trading zone right here. Make sure my mic is on. It is going into the weekly trading zone right here. We're looking for that to pull back up. The ribbon is starting to spread out, so we take a trade there if we get one. We're not going to do anything here with the Russell now because it didn't put in a higher swing. We're not going to do anything with the YM because it didn't put in a higher swing. So now we just have to wait a minute. Okay. And as we wait. That stinks that the NQ stopped us out to the tick. That was bad. The ES could give us a trade here. We're almost there. Almost there. All right, so we came out of the oversold over here. The ribbon is still pretty much spread, but we didn't put in a higher swing. We're about to do the same thing here. Now over here, the ribbon is not spread anymore, so we're not going to have anything there. The ribbon here is not spread anymore, so we're not going to have anything there. So let's go look at some other stuff since we don't have any trade setups right here right now. I haven't looked at Bitcoin at all today. Wow, look at that. Look at that. Well, this was over the weekend, right? And this big move up, that was on Friday? Is that right? Yeah, that was on Friday, and then it went flat over the weekend. It's actually a red day right now. And that was Bitcoin. Let's go look at some of these other things out here. Mara. Well, it's recovered. It's finding resistance right here. This was the first target level. The last green arrow. Blue arrow. Okay, but I don't have any arrows showing on here. Now,
Similar Scientific bought $5 million worth of BTC today. 83 Bitcoin. I'm not sure what this symbol is for that. Probably if you type in SEM.
Oh, I see. Similar. So, and let's look at all. CM.
LER.
SEM LER.
There you
Similar
go.
scientific. There it is. Smiler. It's actually having a big red day right now.
Mm-hmm.
All right. Yeah, it is.
Well, that's a
Having big red-
30-minute chart you're on.
Oh, okay. Let's go to a daily. Sorry about that. 1 day. All right. Well, it's still having a red day.
Mm-hmm.
It's in a triangle right here. Let me see that. It's going to break out big one way or the other here. Charts are suggesting it's going to break out to the downside, but it had a gap to fill there. It had a gap to fill there that it filled. I'm just looking left to see if there's anything else that's got left to do. It doesn't look like it.
That brings their total holdings to 1,012 BTC.
1,012 BTC. That's what, 60 million or 600 million? 1,000, 600 million, I think, right?
So what's that?
1,012 BTC. What's Bitcoin priced at right now? It's priced at 60.
Basically 63,000.
Yeah, 63,000. Closer to 64 right now. Do 63,800 times 1, 2, 3. 63 million, 63.8. Okay. All right. Looking in here right now. So you can just glance at this and see that there's nothing going on. This one needs a higher swing to be trading long again. This one needs a higher swing to be trading long again. This one needs to spread out the ribbon and pull back. This one needs to spread out the ribbon and pull back. It's just easier to see the trades now.
Posted a chart in the Breeze channel today, Bitcoin versus internet adoption, and goes from 1990 through
Here, let me bring it up.
05. Yeah, you can bring it up just short. It's easier than me explaining it.
Here it is, right here. Yep. There it is. Bitcoin adoption to internet users. Yeah. Yeah, you can see it's catching on a lot faster.
Picking up speed.
A lot quicker than the internet did.
Yeah, I'm sure these ETFs they've introduced, which have had some massive inflows, probably. Yeah. Well, they have. Well, actually, they didn't roll those out till 2024, so this only shows through 2023. So those aren't factored in yet. So it should increase the pace, I think.
Yeah, you would think. It looks like it's, I mean, the pace is increasing rapidly as it is.
Mm-hmm.
It gets to the point where it's keeping up with the internet adoption. That's, well, I mean, right now, people at this age, you know, the people that don't have the internet right now, that haven't adopted the internet, they're pretty close to never having internet, never caring anymore, because, you know, you're going to meet the Lord. But, you know, the youngsters that are coming out right now, you know, they were born with the internet. So, and they're also, you know, the ones that are really new right now, they're being born with Bitcoin. So it's a matter of whether their parents adopt it and they spread that.
There was a news article I shared this morning that you weren't tuned into. See if I can pull it back up. Yeah, right here. Telegram founder and CEO Pavel Durov was arrested Saturday at France's Bourget Airport in Paris. 39-year-old Russian-born billionaire was reportedly detained over the company's lack of content moderation. The app's nearly 1 billion users can send encrypted messages in groups of up to 200,000 people. The app's popular among journalists, activists, and dissidents, but has also been used by extremist groups and people involved in drug trafficking and the distribution of child sexual abuse images. So while we are fans of free speech, we're certainly not fans of the other stuff. But the European Union is starting to crack down with what it calls its Digital Services Act, and apparently Telegram was just the lowest hanging fruit. So it's ran by two billionaire brothers who inherited their money. So we'll see.
Time will tell. All right. Hey, it's time for me to pass it back out to you. So let's just go over what we've done here. We've had a few trades. Two of them stopped out. The NQ one stopped out to the tick. That's a shame. We missed a really good NQ trade right here. We took the Russell trade. That stopped out. Just plain stopped out. We took the YM trade. That worked out well. And we haven't had anything else. But that was a quick and brief introduction. And that's how quick it is, really, to what we got going on. There's fewer trades, more meaningful trades. Fewer, more meaningful trades. Easier to see, easier to put on, easier to do with me at the same time as me, because they're so slow with a longer time frame. All right, so if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Once you click on that, you are going to be brought to this registration page right here. All right, on this registration page, yes, first name, your last name, your email, your phone number, 5 multiple choice questions. Then down here, give us your machine ID if you have one for the NinjaTrader, and give us your TradingView login ID. Really, give us a TradingView login ID. Right? That is important. Click register, and then we'll give you everything you need to get into the room with us and to get your indicators indicating. All right, that is it, everyone. With that, I can pass it back out to fabulous Phoenix, Arizona, and studio away, overlooking South Mountain, America's largest city park. And John, if you're in there, I'll send you that link right now.
Okay, recap of the morning session.
Today it took 20 minutes and 4 trades to get to $2,000.
Good job.
Thank you. Thank you.
Okay, guys, we'll pick up where we left off. That was with the ES. We were just getting started. Now, these are last week zones because all the alerts that go out on Sunday night are based on last week's zones, because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. Now, once they're published this morning, they're carved in stone for the entire week. They don't change. And so on tomorrow's broadcast, you'll see this week's zones on my charts. And any alerts that go out today will be based on this week's zones. Again, the alerts that went out last night, based on last week's zones, because the new zones are not yet available. And in case you weren't tuned in at the beginning of the broadcast, the CTAs, the concierge trade alerts, are different than the logic alerts. Logic alerts were in week 317, I think it is. Published 17,686 individual alerts. But the CTAs are different. They're published as a logic alerts can come out anytime around the clock. It's futures trade around the clock, and we have traders around the globe. Our day session is their night session, vice versa. But the CTAs are published as a static report every evening shortly after the Globex open. So the Monday session began Sunday night here in the US at 6 p.m. Eastern. So 15 minutes after the open, all of our members and trial members had access to all of these targets. So just bringing you up to speed in case you weren't tuned in at the beginning of the broadcast. Now the vertical line that you see on the chart, all alerts, both logic and CTAs, are created on a 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I've used for many years. So if it's not broke, I guess leave it alone. When price drops to a weekly zone, we expect support. When it rises to a weekly zone, we expect resistance until proven otherwise. What will happen when price encounters a weekly zone is 70% of the time you'll get consolidation. 20% of the time, you'll get rejection. 10% of the time, you'll get the slice. That's where on the 30-minute chart, price slices through a zone like it's not even there. Typically, when that happens, when that slice runs out of steam, price will retrace to the zone it sliced through and then continue in the direction of the slice. So this was the opening candle last night. This began the new week, 6 p.m. Eastern. Above the BBC, so we're anticipating higher prices. When we're below the BBC, that's the green line, bull-bear cross. Bullish above it, bearish below it. Once we get below it, we anticipate lower prices. Get above it, we anticipate higher prices. So we opened last night well above the BBC. Coming off that rally we had into the close Friday afternoon. But important to note, we had this high on Thursday, this high on Friday. Today's high, 56.69. If we go back to the daily chart for a minute. Thursday was 65.25. Today was 56.69, and the all-time historic high is at 57.21 and a quarter. So we open above the BBC. Now we know price travels in legs. Leg, retracement, leg. So right here we've got basically a triple top across here, reaching back to Friday. We got a double top last night. Based off, this double top was based off this resistance that the market found on Friday. When this candle opened, it was green for a minute. And then it quickly reversed. And once it drew down to where it opened, it became a red candle. And that red candle dropped all the way down to the weekly trading zone, pretty much to the tick. And again, when price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. So we came down basically to the tick, to the zone. We got the support we expected. But we had a series of lower highs. Okay. Now this high has taken out the high of Friday and Thursday. Okay. In fact, it's the high. This was last week. This is Monday today. Step line has crossed. We got a red candle. Step line is your initial area of major support. Then the 38% fib extension. And then this double bottom right here. Okay. The low of this candle is 97.75, and the low of this candle is 82.75. Okay. You can see this one's just a little bit lower than this one. So you got potential support here, here, here. Then we have the 24% fib extension, then the 24% fib retracement, then the low of August 16th, which is pretty close to the daily BBC. Okay. So that's just the big picture backdrop to the ES. So we did what the market does, a leg and a retracement, a leg and a retracement. Pull back holds more often than not. We had red and falling overhead, so price was sort of trapped between support and resistance. We get above red and falling, get a retracement, and then red and falling turns to blue and climbing. So now it's all systems go to the upside. And price, step line, blue and climbing, perfect stack. Took us right up to the long target, pretty much to the tick. Then the step line crossed blue and climbing. When that happens, we expect price to retrace to the BBC. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. It just stands for bull, bear, cross. Again, bullish above it, bearish below it. Bullish above it, bearish below it. So from support at the BBC, we bounced up one last time at that target. That was the 9:30 opening candle. And honestly, that's a pretty small candle for the Wall Street open. In fact, the 10 a.m. to 10:30 was a larger candle than the first 30-minute opening candle, and that's unusual. Typically, your largest candle of the day comes in right at 9:30. So price gets below the BBC. So now we're thinking short. See, as price ran into red and falling, and that long target both acting as resistance, we did spike it a little bit, but down we came, and price dropped to here. A little buying action, and then we dropped to here. And you'll notice, see where the step line hooked up right here? That area is currently serving as support. Once that support breaks, then we should see a move down to the short target at 56.20. So 56.25 to 56.20, that would be 5 points. You only need 2 points to get your goal for the day. Now, notice here that we got our leg, we got our retracement, but we didn't pull all the way back to the BBC. So that shows weakness on the part of buyers. Buyers are right here. See, right at the low of that step line right there, right where it hooked up. We need to break that. Conservatively, yeah, 56.25. You might want to go 24. And you got a 4-point trade down to that short target. On the Dow, again, the vertical line separates today, Monday, which started last night at 6 p.m. Eastern, Thursday, Wednesday, Tuesday. So we opened, we made an initial run higher, taking out Friday's high by just a little bit. So we're always suspicious of just a little bit. Then price gets below blue and climbing. The step line crosses blue and climbing. So we anticipate a retracement to the BBC. But buyers came in early. We did not make it all the way back to the BBC. Buyers came in, drove us up, got a retracement. And then price took off, hit the target, full retracement, back to the step line in blue and climbing. And we almost hit last week's highest weekly trading zone. Yep, that was the highest zone for last week. Price then comes back down, gets below the BBC, get a retracement up to red and falling, resistance, and that's now pushed us back down, and we've got the same sort of formation here that we just saw on the ES chart. Now there's potential support here and right here, here, and then you're at the short target. So trading on the short side, looking at it from a bigger picture, 41,225 down to 41,205. That would give you your go for the day. And then from 41,185, 41,165. Again, that would be good for your goal for the day. Watch this area right here where the step line hooked up. Okay, you saw it on the ES chart. Watch what happens when price comes down to this level here. And it looks like that's the direction we're headed. We got to take out this low, and we got to take out these lows from last night. But we are below the BBC. We do have red and falling overhead. So everything indicates the potential for lower prices. And it looks like it wants to move pretty quick. That was quite a move there. Okay. But keep this area in mind. Okay, because it held all last night as support. But that's when we were above the BBC. Now we're below the BBC. So while it may hold enough for an initial bounce, chances are take it out pretty quickly. Because we don't seem to have any buying pressure at all. Remember, it takes financial commitment for price to rise. But for price to fall, all it requires is the institutional traders just hit pause on the buy button. And price, this is just natural attrition. Okay. Price will continue to drop until the institutional buyers find a price level that they're comfortable with. And then they unpause the buy button and go back to work. Now, in a situation like this, you've got institutions that specialize in short selling. If we take out these lows, they're probably going to come out of the woodwork, and we could see this thing get driven down to the short target in pretty short order. Okay? And that short target is that low right there from Friday. On the Russell, we opened right at the weekly trading zone with red and falling overhead. We come down to the BBC, pull back holds, consolidate. We consolidated at the zone here. We consolidated at the zone here. Once red and falling turned to blue and climbing, that took us up to 2249.3. So we were 7 ticks away from the target. Then price goes sideways, and when blue and climbing gets directly above price, it becomes potential resistance because it's usually on its way to turning into red and falling. Price gets below the BBC, we hit the weekly zone. Again, these are last week zones because these alerts were put out last night. Any alert that goes out today, anything after the new zones come out is always based on the new zones. But even the zones from last week, they're still doing their job. They were last night. Consolidation, remember, 70% of the time. Even if it's just 2 candles, that's consolidation. But it's usually more like this, and like this, and like this. So, this zone from last week, in fact, that was the highest weekly zone last week, 2229/2230. So once price gets below that, then you just got to look left for where you expect for the market to potentially find support. All the way down to the short target at 2204. So got to let the price break down. And of course, if you're a member or trial member, you've got this week's zones to help you navigate this move to the downside. So far, it looks like all the indices want to head lower. We traded through the BBC here, found support at the zone, bounced to the BBC, the pullback held. Now we're attempting lower. The NQ. This is where we opened last night. Dropped to the BBC. The double top right there. That sent us back to the BBC. Support. Consolidation at the zone. And then we made an attempt to get to the target overhead, but we did not. It just was not enough buying pressure. So when price can go no higher, that's resistance. It's going to go look for support. And we traded through. Now this would be a 30-minute candle that sliced through the zone, then retraced back to the zone it sliced through, and the BBC, and continued down. Notice you got price, the step line, red and falling, perfect stack, all the way down to this zone. Now this was a low put in last Thursday afternoon. And then again on Friday, we found support at this zone. Now, 10:30 this morning, we spiked this zone, but it continued to hold wide-ranging consolidation. So now the step line has crossed red and falling. The price is still dropping. That's unusual. You can even see the step line is starting to point down. So 499 to 480. That's 19 points, $20 a point. It's a pretty decent window of opportunity. Crude oil. We talked earlier when we went over the headlines why crude prices jumped as much as 3% in the session early. And we may outdo that. We opened well above the BBC. Got blue and climbing, so we expect higher prices, and it took us basically up to the zone from last week. Consolidated a little bit here, went back to the zone, some more consolidation. We got a leg. That's enough right there. What was the open? 64 up to 83. So that's $190 per contract traded available in that candle. Then we just continue consolidating at the zone. And then, bang, there we go. To the target, through the target, right to the zone. Full consolidation. The high so far, 77.60. The step line crossed here. We've got red and falling overhead. This would be a perfect place to find support. The BBC and the weekly trading zone. That would be support times 2. When price drops to a zone, we expect support. When price drops to the BBC, we expect support. In both cases, until proven otherwise. Now, because of the fundamental news that has pushed, we're technical traders, but sometimes there are fundamental things going on that are so big you can't completely ignore them, but you can still trade from a technical perspective. But that fundamental news that I shared, I mean, the climb started back on Friday. In fact, we went from 73.05. Let's find a round number. $73 to 70. We'll just go with $77. That's $4,000 per contract traded from here to here. That would have meant holding over the weekend, which, again, while institutional traders may do that, most retail traders aren't really comfortable with that. When the price of crude moves $1, it's worth $1,000 per contract traded. When gold moves $1, that's worth $100 per contract traded. Silver moves $1, that's $5,000 per contract traded. So price is just kind of taking a break. Got resistance overhead, support times 2 below. Let me refresh this chart. Make sure it's, yep, trying to make sure it's still active. Having some issues lately. Okay, gold. Here's where we opened last night with gold. We attempted higher, but not a lot of buying interest at that time on a Sunday night. But the pullback to the BBC held. You can see red and falling, just kind of walked it down. Then we get above red and falling turns to blue and climbing, and we make a run up to the target. So an entry on this candle here, roughly 24, call it 25.50. That's those two candles at $700 per contract traded. And where the market ultimately find resistance at the weekly zone that was published a week ago, last Monday at 6:15 a.m. Eastern. Still doing its job. That's just the carryover effect. And when price drops to a zone, we expect support, no matter what market. When price rallies up to a zone, we expect resistance, which we got. Consolidated for hours. We got a leg and a retracement and a leg and a retracement. The pullback to the BBC held. Gave us a leg. Pullback held. And then Friday, as we went into the close, we were below resistance. We hopped above it briefly last night. But the market didn't start to rally until, well, this candle, the one I just highlighted, that is the London Open. Okay? Took us all the way to the zone. Now, on this pullback, while the pullback holds more often than not, I say that a lot because it's really important, we know eventually it will trade through, as it did here. So we got a leg, and we got a retracement to the BBC, and what did it do? Pull back out. Got a leg. Now, this bullish cross right here, okay, when you have a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support. And basically, you can see this support that runs right across here. Okay, the bullish cross took place right here. It's an area. So we've pulled up to the BBC and the long target. This wick here, price got rejected. So I would wait for price to trade 25.43 and trade it down from 43 to 38. That would be $500 per contract traded. What I'm saying is I think we'll see lower prices before we see higher prices. Now on silver, we're going to roll to the December contract. So we'll go from U to Z. But for now, we're still on the U contract. This is where we opened last night, this candle, and it ran right into resistance. It just kept banging its head and banging its head and banging its head. And then it came down to the BBC. It spiked it, but the pullback held. But we were unable to move higher. We had two levels of resistance overhead. So those pushed us down to the zone, which we expect to be support until proven otherwise. We consolidated for a few hours. and we closed above the BBC, and that took us all the way up to the long target. We get a retracement, the step line crosses, we pull back to the BBC, it holds for 30 minutes and bounces us up into the step line, and that resistance takes us all the way down. The zone is 72.73. This low was 73.5, so half a penny. It only takes 2 pennies in silver to get your goal for the day. That price is closed back above the BBC, and red and falling is turned blue and climbing. So as price starts to move higher, watch this area here that was put in last night as potential resistance. Call it 30.08 from 30.09 to 30.11. It's 2 pennies, and that would be goal for the day. Euro. Here's where we opened, went sideways, ran into resistance at red and falling, which took us to the BBC. We traded through it, and on the pullback held, and we got a leg, and we got a retracement, we got a leg, and we got to the zone where we ended up consolidating, but as you can see, price attempted to lower. In fact, it made it down, I don't know, maybe a tick from the short target. Okay, which bounced us back up to the BBC. Resistance, which sent us down to blue and climbing support, back to the BBC resistance, and now price is trapped. Blue and climbing is support. At this point, the BBC's resistance. And we've had a series of lower highs. Back to now. This high is the same as Friday's high. So we had a high, lower high, lower high, and a lower high. So blue and climbing makes it look like we're gonna head higher. But based on the symmetry and structure of the market, I suspect price may drop below blue and climbing. Now, I'm not a fan of trading the euro. I simply do this euro for a couple of our members that do like to trade the euro. I'm just not a fan. You only need one market and one good trade to get your goal for the day. So the S&P's fluid around the clock. 2 a.m., 2 p.m., you never have to worry. It's always fluid. There's never a spread between the bid and the ask. They're always right up against each other. So now where are we sitting? On top of support. Prices have dropped since we looked at this earlier. Okay. And we spiked the step line and found support at the 38% fib extension. As we did on this day and this day. This day we closed below it. The step line is crossed. So we've got some obstacles to overcome. Low of the day, low of Thursday and Friday, 24% fib extension, and then the big one is the 24% fib retracement. Okay, that could be good for a bounce. And then the daily BBC should be good for a bounce. There you have it. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI. Or you can always email us, support@cfrn.net. When you become a passport holder, you'll have 2 hours of live training every trading day in an interactive environment. That means you're trading along in your demo account till you qualify to go live, then you're trading in your live account. And you're asking every question that pops into your head. Your question is never an interruption of what's happening in the live training room. Your questions are the reason the live training room even exists. That's how you learn the strategy. If you just show up and watch, you're not going to learn. That's why you have a demo account. You got to get comfortable pushing those buttons, as Bert likes to say. And then before you go to the full-size contract, you can always, once you've put together 10 consecutive days in a row in your demo account, as outlined in the 2420 blueprint, you don't have to go live with a full-size Emini contract. You can actually go live with a micro account. Now, 2 points in the S&P is worth $100 with a full-size E-mini. But with a micro, it's $10. So you're limiting the amount of risk as you get more comfortable with trading real money. Because when you go from your demo account to your live account, that's where most traders have a big hiccup, because it's real money. And real money makes people do different things and think different ways. And many a mentoring session have I heard, man, I don't understand. I was killing it in my demo account, but then I went to my live account, and now I can't get anything right. Well, one of two things. One of two things has happened here. Either because you went live, you're now doing things differently. Perhaps you're doing them correctly, okay? Because a lot of people with their demo account, what's the $20,000 drawdown? That's no big deal. You get a $20,000 drawdown, but you end up positive 2 points on the day. Boom. See, if you put together 10 consecutive days in a row like that, you're just kidding yourself. Because in live markets with real money, you're never going to let yourself have a $20,000 drawdown until you build off. You're going to have to build an awful large account size to be able to weather even a $1,000 drawdown. So make sure you treat your demo account as if it were your live account. If you do, then the transition to live trading with real money won't be so severe, because you've been practicing doing things the right way. Still, you're going to have nerves, and you may go from demo to live, back to demo, back to live a couple times, as many times as it takes. It is not a walk of shame. It's a wise business decision, okay? When you go live, whether it's nerves or suddenly you're just doing the right thing, getting the wrong results, then you just go back to your demo account and you book a mentoring session, okay? Get to the root of the problem, okay? It's like if you're brushing your teeth and you spot, a tiny little cavity in one of your teeth. Are you going to wait until your whole side of your head is swelled up and you're screaming in pain? Or are you going to immediately make an appointment with your dentist as soon as possible and get that cavity fixed? Same with trading. Don't dig yourself a hole. Okay? When you go live, if things aren't working right, there's a reason. We just have to figure out what it is. Take advantage of the resources available to you. Along with 2 hours of live training every trading day, you also have access to one-on-one private mentoring. There's no additional cost for that when you become a passport holder. Also, the strategy that you learn, the indicators that you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That cycle has been in place since the inception of the markets. It will remain in place till the markets cease to exist. Why? That's how markets work. Plain and simple. Again, to become a member, just go here. If you've been on the trial, you'll get an email with specific instructions on how to become a member. But if you have questions, you want to go ahead and get signed up, call 949-42-EMINI or email support@cfrn.net. On Friday, our good word for the day was don't wait. Enjoy your life now. Today, we're going to talk about money and marriage. Now, you're probably aware of the extraordinary divorce rate there is in America today. You know, back in the day, divorce was something that was really frowned on. It was a shameful thing. Certain denominations, in fact, they'd boot you out if you got a divorce. That's a little severe, especially if a woman has a husband who's beating on her or cheating on her or whatever the case. And the same with a man. You know, that pendulum can swing both ways. We know it's typically one over the other, but it can happen. But whether it's the secular world or even the Christian world, divorce rate is extraordinary. It's as if people take yeah, well, let me give it a try. If it works out, that's awesome. If it doesn't, I'm still young, I'm still pretty, I'll find somebody else. These prenuptial agreements, those astound me. You're already planning the exit before you enter. I mean, that's just a divorce waiting to happen. Now, I understand that one person has, assets and they don't really know this person yet. So they're protecting themselves. Well, if you're closing up your pocketbook, you're really not opening up your heart. So, even Paul said, it'd be better if you didn't even get married. But because you have certain desires, then most of you should get married. But anyway, our topic today, money matters in marriage. Proverbs 15:27. He who is greedy for gain troubles his own house. Today, one of the biggest sources of conflict in marriage is money. That is because a husband and wife often have opposite ideas about how money ought to be used. Stop and consider the words delayed gratification. When one spouse is willing to delay purchasing something until their financial house is in order, but the other one isn't, the battle lines begin to form. Another disagreement that can arise is deciding when and for what credit should be obtained. This is treacherous territory. Nothing irritates a disciplined, thrifty person more than living with someone who wastes their income and their future earnings on things that aren't truly needed. How does that saying go with credit? We spend money to buy things we don't need to impress people we don't even like. Think about it. Now, having good credit is a good thing. You never know when an emergency is going to arise. 70% of American households, sadly, are one automobile emergency or one accident on the soccer field away from insolvency. That's a frightening thought. So credit is good. You should have it. But you got to be very careful how you use it. And as you all know, my namesake is living with me now, and he's just completed his first year of college, and he's got a job, and he's only 18. But these credit card offers, because not only do I get the physical mail that comes to the mailbox, but, well, I control the server in my house. So he's tempted every single day going to debt. And if you're a credit-worthy individual, no matter what your age, you're probably tempted every day as well. Even Equifax, the credit monitoring agency who knows what a debt-ridden country we are, I get emails from them just about every day telling me that I'm pre-approved for an auto loan. I'm not looking for an auto. My daddy van is 10 years old, but it still works just fine and looks nice. I've tried to take good care of it. But think how tempting that could be to someone who's trying to keep up with the Joneses. Man, guy across the street just got a Benz. Guy next door, just got a Range Rover. Gee, I feel less than with my town and country. It's a devious world out there. I know this is about money and marriage, but the biggest reason most marriages fall apart revolves around money in one way or another. Another potential minefield in marriage for many is deciding when and how much to give to our children. Because we love them so much, we want life to be easier and better for them growing up than it was for us. But it takes a steady hand to hold a full cup. The Bible clearly teaches the virtues of hard work, living frugally, saving, building, and producing by the sweat of our brow. And if our children don't learn these virtues the right way while they're living under our roof, there is a good chance they will learn them the hard way as they attempt to build their own home and their own life. So, here's some good advice. Stay out of debt as much as possible and be extremely cautious with credit cards. And if you're in financial trouble right now, I highly recommend Dave Ramsey. Okay? He's had a radio show for many, many years, popular website, and he has what's called the Financial Peace University. It's a program designed to help you get out of debt and then, more importantly, stay out of debt. Again, I'm sure you're familiar with him, but his name is, just Google Dave Ramsey. Chances are he plays on a local radio station in your area, or in this modern internet age, you can listen to podcasts of his shows. So you don't have to tune in live. You can catch it later. The misuse of credit and the misuse of money can weaken your family's stability and future. The credit cards, they should come with a warning label. Danger. Handle with care. In Luke 12:15, Jesus put it this way: beware. Guard against every kind of greed. Life is not measured by how much you own. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.